Now we have a pillar of guidance and know-how when it comes to investment and finance, Mr. Brad Barnhorn. Come on up to the wonderful New Beverage Shit on couch. How's it going?
It's good. Great to be
What
here.
do you think of our suede couch here?
This matched the jacket I was wearing last night.
This is the jacket you were wearing last night?
I had a suede jacket on. Very classy New York style, you know. Us West Coast guys occasionally can get stylish.
You know, I didn't see, and this is for anyone who knows Brad, he is to purple like I am to blue, except I'm not wearing blue today. But no purple shirt yesterday.
You know, occasionally just to reset expectations, keep it a little fresh.
Okay.
Because fresh is in.
Yep.
I do like to vary color, but I go back to the Prince Purple Rain era whenever I can. So
I
try to keep Prince's memory alive.
Outstanding, outstanding. Now, you had a great presentation today.
Thanks.
Really well received. We got a lot of great comments on social media about it. Let's quickly talk about your involvement with Circle Up, which Jeff briefly touched on. Circle Up, as you might know, is a crowdfunding website that pairs investors with brands, correct me if I'm wrong.
Correct.
And they're starting a whole bunch of new funds, or they've started a whole bunch of new funds, one of which you are running.
Yep.
Can you tell us a little bit about that?
Yeah, so as you were saying, Circle Up is designed to give investors more companies to look at to invest that can access otherwise,
yep.
and give companies more investors to access. So there's roughly 10,000 investors on the Circle Up platform.
Okay.
A lot of those, some of those are very consumer savvy investors. Many are people who have an interest in the consumer space, but really don't know where to start when it comes to diligencing companies and looking at companies.
Right.
So the idea here is to have, there's 6 funds that are formed with 6 fund managers. People are in the consumer space. My focus is more toward food and beverage and healthy living. Other folks may have an apparel focus or skincare focus, personal products. So the idea is to give investors a range of fund managers to look at who maybe are focused on sectors they want to invest in, but have a perspective, have the network, have a way to think about those companies, and therefore they can invest alongside the fund manager.
Oh, interesting. Very cool.
So all the fund managers are investors themselves. So I'm an investor in the fund as well. So it's not purely managing their money. I am co-investing as well. So it's really me investing capital of my own and then participating in that work and on where to put it.
I see. Now, how many brands are you looking to invest in?
Yeah, the goal of each fund is about a $3 million capital raise.
Okay.
My view is, we'll see how it plays out, is probably 10 to 12 investments, $250,000 per investment.
Okay.
I don't think it's going to be 30 or 40. I don't think it's going to be 1 or 2.
Yep.
It'll depend on quality of companies. It's a pretty quick deployment period, meaning it's not over the next 2 or 3 years. It's going to be deployed the next 12 to 15 months after the fund is raised.
How large or how old of these companies are you looking for? I mean, are you looking for companies that are under $1 million in sales at this point?
So Circle Up, by definition, is younger companies.
Right.
Within that, there'll be some seed stage investments, but probably a little more toward growth capital, meaning companies who already have probably $1 million in revenue. Okay. So it's not a total venture seed fund. I'm looking more for companies who sort of have some proof points. Yep. And probably are north of $1 million, although selectively there might be some that are younger based on a certain thesis or management team or some of the variable looks good. Now,
it's interesting that you're looking at these companies that are around $1 million or higher in terms of revenue. And in your presentation today, it was great because you were talking about, it's not just revenue that matters, it's the quality of that revenue. Quality and quantity are, there needs to be a balance there. Yeah. Can you talk a little bit more about what you mean by quality revenue?
Yeah, quality revenue has to do so much with velocity. Okay. It has to do with where you are selling, do you perform? Right. And that goes to the point, if you have $1 million in revenue spread across 2,000 retailers, very different number than if you have $1 million revenue spread across 100 retailers. Right. So it really speaks to that dimension, but what that ties into is it costs money to enter retailers. It costs money to put a team in the field. Right. So the more you got to be in more doors or more markets for the same revenue number, not just does your gross margin maybe get affected, but below the line costs, meaning your sales force costs are higher. Yep. Your marketing costs are higher for field marketing. So it's really a function of how do you get focus and create scale in small pieces of the business. Quality revenue gives you revenue that allows you to create scale within a retailer or a market. What's a good example of a brand that has really great quality of revenue? Yeah, I think if you look at a brand, obviously it's well known at this point, but Suja, where you can drive great. Let me go back further in time. When I built my company, Fantasia, we were doing in a Whole Foods, $2,000 a week. At wholesale. That allows us to demo aggressively. You take that to a whole market where we were in accounts driving that type of volume, allows us to put field teams out there. It allows you to build micro scale. That's what you want to call it. A company of $2 million isn't going to have scale in a Coke or Pepsi sense.
Right.
But if you focus in certain areas, you can build the scale, which allows you to put the depth of the business model, meaning field marketing, sales team behind it. Yeah. So I think you see with any of the good companies who are scaling quickly, if you just burn capital, some companies raise a lot of capital, keep scaling. But in general, you fund out of two ways: gross margin creation, or out of new equity. Right. And that's all that you have to fund sales, all the below the line expenses, so to speak. So companies who are focused and drive quality of revenue have gross margin funding the business versus just new equity all the time.
Right. Now, you mentioned gross margin a couple of times. I remember Todd Berardi from Highball, who's actually going to come and speak with us pretty soon. He had presented at BevNet Live, and famously, if I can remember correctly, he said, if your gross margin is not 50%, don't do it. Now, I don't know if that's really reasonable or viable for many brands, but what is a reasonable gross margin for a brand?
You know, I'm gonna give a little more texture to the answer than maybe some people would. I mean, the rule of thumb in our space is really more 40%. But it so much depends on how you spend money, in the sense of, if you're a trade spend heavy brand and you're more in conventional channels where you can't demo, and where you're in a target setting, you're in other settings where a lot of it is price promotion driven, then and not much consumer marketing, once again below the gross margin line, then you can have lower gross margin because you're not trying to fund a bunch of field teams and things below the gross margin line. Right. So you could be a 30-35 margin, but if very little marketing expense happening below that, that could be a viable gross margin. Where if you're a company that's counting on a lot of field marketing teams, on in-store demo, costs that come below the gross margin line, then you better have that 40-45% gross margin or a path to it, or else you're going to have an endless equity need to fund that. Once again, you either fund those costs out of gross margin creation or out of new equity or new financing. So it depends on where you spend your dollars, what that number should be.
Vision and pragmatism.
Vision and pragmatism.
There you go. So you've got to know your numbers. If you want money, they want to know that you know everything about your company from a financial standpoint. So pay attention to that and reach out to Brad Barnhorn. He's got a boatload of money for you. No, I'm just kidding.
a small dinghy of money. A small dinghy. So,
well, thanks so much again for doing this. Really appreciate it, and we'll be seeing you soon.
Great job.
All right, thank you.